Excuse me. Hello guys. Hello. Mic test. So hello guys and welcome to our 102nd 22nd edition of the Trading Opportunities webinar. This is Nirav and just running a quick mic test right now. Looks to be going well at my end. So if you guys are live with me, do let me know in the chat if audio is working fine. If there is any issue, of course, let me know. In the meantime, I'll just give a very quick introduction, guys. Thank you for that. There's an echo. How about that? Echo should have been resolved somewhat, or maybe just my voice has been changed a little bit. I've caught cold, so that might be what you are hearing different. All right, guys, I'll check the upcoming comments later. Thank you for the confirmation. So let's get very quickly done with the quick introduction. My name is Nirav. I'm the admin owner of 50eyes.com website as well as the 50eyes market analysis YouTube channel, where we are currently live with this 122nd trading opportunities webinar. It's also being broadcasted on my LinkedIn page. If you want to become a connection there, you will find my profile link in the video description of the YouTube channel. Right. Coming back to this webinar, we do this every Friday at the same time, of course. The timing is always 2 p.m. GMT or 7:30 p.m. IST. So just convert it to your time zone accordingly. And those who are live in the webinars can also ask me questions or whatever they would want to ask regarding the analysis which we discuss. Right. And that being said, moving forward about the performance of the webinars, we have in the past 121 webinars so far captured a total of 301 trades, right? And that includes 4 setups which were discussed in this 121st webinar, which was conducted on 28th of June, obviously Friday, last Friday. We will go through all those setups because we always check the past analysis and then check the live chart, right? And coming forward, I'm also the author of the book Think with the Markets. It is available on Amazon's Kindle edition. There's also a separate what do you call advanced concepts webinar which is conducted basis of this book. You can find the details for it over here on the website 50years.com/think with the markets. And here is the forecast accuracy which I always show off before proceeding with the webinars. As you can see, since 2016 I've been keeping a track record of all the stuff which I say online, basically webinars and videos, because I've been online since 2016 producing my analysis for public viewing. You can see the track record has an accuracy of 80% plus consecutively for these 6 years till 2021, after which we started doing this trading opportunities webinar, for which I just mentioned we have captured 301 trades in last 121 webinars, right? So that beats all industry standards, and it's the highest in the industry as far as my knowledge is concerned. Generally, such accuracy and with such consistency, I personally have not seen anywhere. That's why we always show it off before letting our audience hear more of my jibber jabber. With that being said, lastly, this is the way we will continue with these webinars. First, we'll discuss the chart of euro, followed by crude oil, gold, S&P, Nifty, and in the end, we'll discuss Bitcoin. Right. And lastly, there is a small announcement here. I will be starting a new batch for training program LT, which are personalized classes for serious students. Those of you who have done my video course on Elliott Wave and would like to learn more of what I do, how I do things, can apply for this by visiting this link 50years.com/training program LT. And those of you who are wondering, there is a free version of the course which is available to everybody. No registration required. Of course, you can just go to my website and use the link which will now scroll at the bottom of your screens 50years.com/v, and directly view the small free course or the free version of the course, so that you are able to understand what's going in the webinars. Those who are more serious can obviously buy it over here. Elliott Wave course, 1600 plus students already there, right? With that being said, let's now head over to our actual webinar stuff and get started with our analysis and stuff. So first of all, let's have a very quick look at the recording of our last webinar and check out what was being said on the chart of Euro USD. Here is the chart. and this was the main analysis. My view was that this market has some upside remaining before a fall, and I had a minor long position on, which did not work out. Our stop loss was triggered, and that position was closed. And it looks like the alternate view is now playing out. Now let's look at the alternate view again. By the way, if you want to check the whole analysis, I highly suggest you go to the YouTube channel 50s.com. Oh, sorry, 50s Market Analysis on YouTube, and just go to the live section and check the 121st webinar yourselves. The discussion is 4 or 5 minutes long, I think, and there are a lot of details. I'm just showing off a screenshot kind of paused video for the sake of record keeping. Anyways, now let's head over to the actual chart of euro. Here it is now on screen. So this is the updated view, or the updated count by which I think euro may have some downside remaining. Let me remove everything. So from this point of reference, which is the price level of 1.12779. So from here, what we believe is this market is in a possible zigzag correction. And in this zigzag, this is the general way a zigzag will proceed. So if our assumption is correct, this is our first leg of the zigzag, which is also called a wave A. Next leg is a corrective upside called a B, and then a C leg down. So my understanding is that possibly that B is still continuing, possibly as a triangle. If this understanding is correct, then what we will see is, excuse me. So if this understanding is correct, then what we'll see is once the B is complete, we'll see a breakdown of this market. The confirmation will be there once we see a move below 1.06809. So Y still remains sort of short, but the second thing which we need to keep in mind is that this wave B may still be continuing. It may not be a triangle, although it does look very much like it's a triangle. It may just be continuing as some sort of zigzag itself, right? Who knows? Maybe it's a flat, right? In which case, it will just continue going up, and we don't really care much for it because our downside trigger is at 1.06809. It will not get triggered, and we will not go into a short position, right? That being said, that's our take on euro. We look for a short consideration below this level, and we'll possibly consider longs once we see a move above 1.08677. Or to be more clear, if we see a sustenance above this trend line, then we'll look to consider possible long trades. So wait and watch on euro. Nothing much to add here. And at this point, I'll just quickly check the comments. Of course, guys, if you have any doubts or questions on this chart of euro USD, which we have just discussed, you can just push them in the live chat, and I'll take it from there. Hello, Aditya. Hi, Rockford. Hopefully the echo has been resolved. And good morning to you, Louis. You have joined in early today, I can see. Thank you, Adi, for the confirmation. Okay, Louis and Rockford. Okay, so now in that case, I don't see any queries for this chart. So let's quickly move ahead on the chart of CL, which has kind of gone and done things as we expected them to. So let's just very quickly go to the recording of the last webinar, which was conducted on 28 June, and see what was being said on the chart of crude oil. So here is the recording. Somewhere here I was discussing crude. Yes. So this is what I wanted to. One second, let me just go back a few seconds here. Yeah, there it is. Let me pause the screen here. So this is the main theme which we discussed in our last webinar on CL. The idea was that once we see sustenance above this long-term incoming resistance trend line, or just let's just say trend line, then we can confirm that we have some sort of bullish activity or bullish play. And I was mentioning that the classic or the ideal setup would be that if the market goes above this trend line and takes support on it, that gives us the most ideal play. Of course, there's a more detailed short-term discussion and counts, etc. You can just watch them in your own time, and obviously always watch these videos at 1080p and full screen. Otherwise, this black background really does make things a little bit harder to watch. Anyways, so that was the count, and it kind of played out literally as per our classic expectation of the setup. So let's head over and see that on our chart of crude oil, which is right now on screen. Firstly, let me just remove everything and point to the time we were discussing this chart, 28th of June, somewhere around here, maybe. I think we were discussing this chart live last time. And this is the dotted red trend line, which I mentioned. We want to see sustenance above, and the most ideal scenario was that we want to see the market go above this trend line and then take support on it, and that will be a classic long trade setup. Now, as you can see, firstly, the market after our discussion on 28 June has gone and crossed this trend line, right? And then went down, tested it once, tested it twice. You can also call it just as one test because it is within the same range. But anyways, you get the point. It has been tested and the market then rallied. And you can see I was not the only guy who figured it out. There was a strong rally indicating that this was a setup a lot of people were after, right? The more the volume, the more people were active in this setup. Mostly analysis as complex. This time the analysis was very simple. So I guess many people would have captured this rally. So, right, that being said, if you were live with me, if you were able to follow this analysis properly at your end, then hopefully you were in on it as well. But as far as I'm concerned, we did take some positions on CL specifically in the current context of price action. I'll discuss that trade in a second. Let me just go over the count which we have right now on screen. So it seems like our triangle count may or may not be playing out. 1 second, ABC. Yes. Right. So let me just discuss the count we have right now on screen, and then we will move forward with the current trade which I just conducted. This sounds good. Okay, rock fault. Let me just hide this. And yes, so here is our point of reference for this count. We are looking at the price level around 80.518. From here on, we have the upward movement, which I am currently looking at as a possible diagonal formation. In this case, this looks like an expanding diagonal, and expanding diagonal is a five-way formation in which you have the wave 1 and the 2. An important characteristic trait is that the 4 overlaps the 1. That's the important thing. And once you draw trend lines around 2, 4, and 1 and 3, they seem to diverge. So you can call it diverging diagonal or expanding diagonal is the more proper or common term. Anyways, you get the idea. This is the setup we are currently looking at, and this is how I have counted it. So if we remove all the counts, it probably will be much easier for you to understand here. This is the 1, this is the 2, this is the 3, and this is the 4. And here we are in the 5th. Now the basic theme is that we want to see a break of this last high. Generally, a failure in 5th can be seen, but I do not think that will be the case in this on this chart. Right. Basis of this idea, I have taken scalp longs, big position sizes around here. I think we'll check the trade in a jiff. Right. Right now, the idea remains the same. We are expecting that we are within the wave 5, this 5 on the rough right hand side. You can see we expect this is still in play, and being in play, it is still having one leg up remaining. And as the basic idea suggests, we expect it to take out the high of 84.641 at least. That's the minimum. 84.641 plus is the minimum target we expect on this counter. So with that being said, it is possibly inside a wave B play. Whenever the B is complete, we expect to see. Here I can probably I will take some long positions, scalp longs above 84.453 for this minor move. And actually, I can also build up some minor longs right now as well and kind of play it like a small position which I have to hold for a few hours. Both kind of things exist, and the whole play is quite simple. I've just told the whole story, which I think the market will possibly follow. The time we will be wrong is if the market, instead of going higher, takes out this trend line, which is this 2-4 trend line, and then trades below it without taking out the high, then we know possibly something is wrong and we need to get out of this market. So technically speaking, the stop losses will be around 83.20 if you are strict with these things. But as with everything else, we have to be a little bit flexible, see things for how they are going instead of taking strict numbers as our stops or anything. That's my play for CL. And while we are at it, let me just quickly check. There it is. These are the scalp longs. Added scalp longs yesterday. And as I suggested, the idea was that 84.066 we added it. The idea was that we expect this leg to take out the high of wave 3 and then exited after 1 or 50 minutes, roughly speaking. So with scalps, the main theory always remains you are going to take a bigger position and you are going to hold it for a smaller period of time because you have a much bigger position than your general position size. So I did not wait too much, exited around it for 384.385, but the position was quite big and the profit was substantial for this particular trade. But anyways, all these trades are of course posted live in our Slack group. If you are interested, you already know the details are going. You can request the details by using the link at the bottom of the screen currently scrolling. Right, that was our quick trade on CL, which I just wanted to show off. I don't see any doubts or questions on this chart of CL. Hopefully, everybody is clear on the setup we just discussed. If you are guys a little bit of clear, understood, or something like that, a kind of feedback would be nice. After all, this is a live webinar. If not, I'll just move ahead with our next chart in a second. So we are going to now check out the chart of gold. Here is our discussion on gold in the last webinar. Let's see what was being said. Let me just play this and see what was being said here. There were two counts. The main count we were thinking was the bearish count, and then there was a bullish count. Yes, there it is. Yes. So what we were thinking in the discussion of gold last time was that main view was that this market is going to go lower in this diagonal kind of formation. And once this downward movement was complete, then we will look for longs. The alternate view was if the market goes ahead and breaks this trend line, this 2-4 trend line, then our bearish count gets relegated. And then we switch to the bullish count, right? Which is kind of exactly what happened. In this case, we had to change our count. And now let's look at the actual chart and check out how that change actually looks on the real chart. So here it is live in front of you guys. 1 second. Yeah, so here it is, the chart of gold. And here is the trend line which we were looking at. So the main view in the last discussion was that if the market, instead of going lower, takes out this trend line, then the bearish count is relegated. So this was what you would call in classic terminologies the invalidation level or invalidation trend line, right? So not only has the market gone above it, it has kind of taken support on it once, and then it's a second test here, which is kind of suggestive that nothing really. It's just a trend line. The market is testing a trend line. Anyways, so what's our count right now? Let me just remove it. We don't need it right now. So our count right now suggests that we are possibly from this point of reference, which is the price level of 2430, have a possible downward movement, which goes somewhat like A down, B up, and possibly a C down from here. Now with this B, we are assuming that it is itself following a flat kind of structure. That is itself has A up, B down, and C up. And this is just my assumption. It can of course be much more complex. But if this assumption is correct, then we are currently in the C of the higher degree B. And within that C, we have a possible diagonal in play. Let's make the higher degree a circle so that it's distinguishable. So whenever this B completes, we'll see a leg down. Another interesting thing is we have at least one more leg up remaining on this counter. As per my understanding, we will have at least one leg for the C up. And the secondary scenario, let me just draw this. This is the current scenario which we have on chart. Let's call this the hypo 2, which is suggesting upward movement followed by downward movement. And the secondary scenario is that this just continues going higher for the circled B degree, and not as a diagonal, but it forms an impulse or some other formation, takes out even the high, and then probably not even higher, then at least tests it or goes near it, then give a minor C down circle degree, and then takes off. So H1, which I've just drawn on screen, is suggesting more of a strong bullishness, minor bearishness in the short term. So as you can see, both of these are suggesting bullishness to a certain degree in the short term. One is suggesting absolute, one is suggesting smaller. That is my take on gold. I do not have a position on gold right now. The idea is to wait and watch to see how this diagonal plays out. If I do see some clarity over here, then I will look for some longs for this 4 pullback and look to play out this 5. Possibly not even the whole 5, possibly look for scalps on this 5. That's actually the rough way we are thinking. That's about it for our discussion on gold. If you guys have any doubts regarding the analysis which we just did, you can post that in the live chat before we move to our next charts, which will be S&P followed by BTC. Sorry, Nifty and then BTC. Again, all of those counts also have played out as per our discussion. And yes, before we move forward with our charts, one quick request, guys. I would request that you kindly hit the like button, of course, but more importantly, share the content. Suddenly, I'm seeing a exceptional drop in our viewership. For instance, the last video has not gotten any views. I'm not sure what's up. You can see it yourselves. This is far lower than our normal view count. Probably YouTube algorithm isn't promoting the content anymore, so it's up to you guys. If the views continue to decrease like that, then who am I making these webinars for? So kindly share it with the relevant audience. If you are in some forum, some trading group, or WhatsApp, Discord, Slack, whatever you guys use, do your part, guys. That being said, let's now head over to our next chart. And why did I even close that? That's what we are going to look at. So now let's head over and check the chart of S&P's 500 and see what was being discussed in our last webinar on this chart. We started discussion somewhere around here. Let's see. Yeah, that was the main theme. Let me just play it. All right. So it looks like our discussion was that we are in a wave 4 and then more upside is expected, and I was already long on this counter. I do recall that much. And let me see if there's something else we discuss. It looks like pretty much that was the main theme. So as we all know that the market has gone up since then, but let's now look at it on the actual chart. So here is the actual chart right now on screen. We have a sort of sideways movement here. And before we proceed, let me just show you where is 28th June, 28th June, 28th June. Okay, there it is. So since our discussion, the market did fall. There was sideways movement in this box range, which was part of our discussion. And now that I recall, I was able to get out of it before it could go in loss. Let me actually go over and show you guys 28th June. Yes, there it is. This is a trade which we were discussing during our webinar 28th June, added minor longs, booked profit on longs at once. So after the webinar, after the webinar, I had to get out of this long trade because I sensed that this market can give a corrective downward movement. Again, this theme I have discussed in the live webinar as well. So we were able to get out at 5515, and our entry was, I don't think, was very good either. 551, only 5 points. Right. So that was our quick what you call take on the last webinar discussion. The market did go lower as per our analysis. We were expecting sideways movement within this range. Market did go lower and then it has gone up again, and I was able to capture trades here and there on this. Did longs, possible nested impulse in play, trail. Yeah, there it is. Since this market has been going, 1 second. Yes. Since this market has been going in this diagonal, we were able to spot this diagonal as well. And I added longs basis of that here around 5507, as you can see here, which will be somewhere here. And then there was more analysis, booked profit on longs at 5538. So good 31-ish points have been captured since then following this analysis. And obviously all of this was posted live in the Slack group. Those who are members have already been there and following these trades and whatnot. Now coming to the actual chart, what's really happening right now? This has become a little bit of a confusing situation. My understanding is that from this point of reference, which is the price level of what is this, 5454, we have an impulse, and it is kind of clear here. You have the 1, you have the 2, 3, and the 4, and then this was expected to go up. Now there's a slight bit of disparity here. The 4 has gone way too much sideways than expected. The free 3 is way too smaller than expected. So there was this alternate view I have, which is currently active, as you can see on the chart, green count 1 and 2. So that alternate view is that this is in itself a 3 in play. So everything is suggesting strong bullishness, and as far as Nasdaq is concerned, is going up and up, more bullish than S&P in the short term at least. And I also believe S&P has more upside remaining, but the proper invalidation level for this whole thing will be around 55. Actually, below 55.20, I don't think we can any longer consider this as a viable count. Below 55.28 is possibly doing something else, and we will have to consider alternate views. But as long as it's not going there, I think a strong move up maybe incoming. Right. So my current bias remains bullish as long as we sustain above 5520, and the count remains rather simple. As you can see, we are expecting a 3 of the 3 or dot 3 of wave 3 in this series of progressions. Right. With that being said, let's now head over to our next chart, and I'll wait a few moments. If you guys have any doubts or questions on this chart, you can just ask me in the live chat, of course. And let me see one thing here. No, we don't have any specifically placed target level so far. Anyways, so expecting more bullish activity from this counter right now, and the view is as I discussed. Again, guys, if you are in the live chat, a little bit more participation would be nice, and thank you, Aditya. So with that being said, let's now head over to our next chart of Nifty 50, which will be followed by BTC or Bitcoin. So here is the recording from our last webinar. Let's look at Nifty here and see what was being said about Nifty's chart in our last discussion on 28th June. Let me just play this video a little bit and see if something else was being added. Yes. So this was our main count. We were expecting a fifth wave up. The main theme was that wave 4 correction was either complete or continuing. There were two levels which we were looking at. If I zoom in here, you can see 23982 was the first level, and the second one was this around 23850 or whatever this level is. So the expectation was that either the market will take support at this level and give the upward movement, or it will go and touch the next level and then give the upward movement. So overall, our bias was swing long on Nifty 50. Again, it did play out, and I had taken not one or two, but thousands of trade literally on Nifty within the last week. And of course, its constituent stocks. I'm trading all the major pairs time to time, of course, not all of them, but wherever the opportunity presents itself. And now let's look at the actual chart. And this one also has played out picture perfectly here. So this was the level which we discussed in our last webinar as the first level of reversal. You can check the date is 28 June 2024, and the market has gone up from there. And now let's look at the current count. The current count here is one thing to note, that this trend line has been taken out, and this was kind of an important trend line. So which basically means that now here is the possibility that this market can go either sideways or a little bit more to the downside before continuing up. So this is just a possibility. We have to keep in mind that the larger time frame analysis is suggesting bullish trend, and since the trend is bullish, we are more or less looking for long plays before short plays. So what do we need for a confirmation for continuation of this bullishness is at this point is kind of very obvious. It is a break above the last high 24399. So even around 24,380ish, we can say that we do have the slight confirmation needed for continuation of the upward movement. And there was a swing leg up within the last 30 minutes, but it did not confirm the whole thing. So a little bit of a wait and watch, but we are more interested in bullish plays. And I would like to, with that being said, discuss some bearish targets here. If the market continues to the downside, we have the first target incoming around 23960, followed by this white zone, which is 23877 to 23750. So this is the main support region where this market can go to if the bearishness continues for the time being. And bullishness is basically wait for breakout. And I'm actually following a lot of stocks here. As you can see, the whole banking sector, major stocks and all that and whatnot. And I'm sensing the next rally is incoming if it's incoming by the flow of money in the pharma sector. So sector rotation is in play, and I think pharma is the money is where the money is being moved right now. But anyways, I won't go in too much detail because then I will have to discuss way more than what this webinar will allow us to do publicly. So with that being said, we are looking for only breakout plays above 24290. Let's say we 1 second 390 plus we look for long, and to the downside we have supports around 23960 and 23877. Breakout longs, and if the correction continues, then again longs once the correction is complete. That's about it. Nothing much to add here. And with that being said, let's now head over to our last chart. Again, of course, if you guys have any doubts or questions, just put them in the comment section. Otherwise, we are now looking at the chart of BTC, which literally went down as per our analysis from last discussion. And here is the recording done on 28th June. We were discussing the chart, and you can check the whole thing by going to 50 as market analysis YouTube channel, clicking on the live section and checking the 121 webinar. So around here, around 34 time mark, we are discussing it, and we are expecting wave 4, which will then be followed by a fifth leg. That was the main count we had. The price was, let me see, 60,794. And here is the live chart on screen now. From 60,795, the market has gone to make a low around 53,600 something. That's a big move, quite a big move. And it's currently trading around 55,000. So that bearish setup has played out. It has broken the range as well, which is suggestive that further bearishness is possible. And basis on that, we are tracking this bearish count, which is now what I will discuss with you guys. Let me just go on a 4-hour chart here, discuss things in a little bit more detail here. So one down, two up. So from this point of reference, we are looking at this count. And I don't think this is even correct. We have to update this as well. But let's just continue with the rough idea. We have around 63,700. We started this impulse down and it looks like we have this was counted way back when we were not expecting this big elongation. Looks like this 3 is itself expanded. And we are currently possibly inside, we may have completed the 5th. So anyways, what I'll do is I'll give you the general idea of our expectation. We are expecting that some sideways movement can ensue from here, but we are still expecting at least one leg down for this double bracket 5. And if this continues, then probably one more leg down after the circle 4 is complete. So I can't speak up for what will happen in the future. But from what I can see, this count has worked out and we will look for some sideways action here. Once this sideways activity is complete for this double bracket 4, we will look for bearish setups. So here are the important levels to look out for. I'm just marking them. $55,973 and $57,466. These are the levels where we expect that this market can go up to. It's already gone till the wave 4 level. And from here on, we expect if it takes resistance, then more downside can be seen. Again, I expect some sideways movement before it just goes lower. We don't expect a straight off down leg. Some time may be spent here is the expectation. So that's about it for our last chart of Bitcoin. With that being said, we have discussed all the charts which we generally do discuss in these webinars. If you have any doubts on this chart, you can just type that in the live chat before we close off the webinar. And thank you for staying till the end. If you enjoyed the content, do not forget to hit the like and much more importantly, share the content. As mentioned previously, YouTube algorithm seemingly has dropped promoting our content. And we are left with a measly little amount of views. As you can see in our 121st webinar, this is the performance. So now it's completely in the hands of you guys. If you are liking the content, why not do your part and share it? I hope you guys are going to do your part. And with that being said, I'll just look at the last few comments we have received. Thank you, Rockford and Lewis. And with that being said, let's now close this discussion. Thank you for staying till the end. Thank you for the nice comments as well, guys. And I'll catch you guys in the next one. Take care.